Do you have a dream of being able to seriously increase your income through trading or even trade full-time for a living? At one point or another, most of us fantasize about the idea of being able to use our own resources to trade the markets for income. But we invariably run into a pretty serious problem when we realistically analyze our prospects for doing so. On the one hand, we've got the stock market, which on average, over a very long period of time, produces an annual return of 7%. And if we look at the bond market, it gets even worse. These days, you'll get returns of 1 to 3% to give someone else your money for a long time. For most traders and investors, the lifestyle they dream about simply can't be achieved with returns of 1 to 3%, or even the much riskier 7% that comes from investing in the stock market. Well, in this video, we're going to open up a whole new world for you that has the potential of achieving returns that can get you where you want to be financially. So last year in 2018, the S&P 500 had a negative return. It was actually down 6.24%. In this video, we'll show you a simple technique which, had you applied it in 2018, would have returned way over 100% on invested capital in a simple, easy to follow way. The technique I'm about to show you in this video is actually a very simple example of a powerful strategy known as the credit spread technique, which is known to professional options traders, such as the traders on SMB's options trading desk here in Manhattan. And the best part is how simple it is to apply as long as you're able to follow a few very simple rules. So if you're interested in learning a technique that would have returned well over 100% in 2018, when the rest of the stock market investors were losing 6% of their portfolio value, stick around and you'll see how. Hi, I'm Seth Freudberg, and I'm the head trader of SMB Capital's options trading desk. SMB Capital is a proprietary trading firm located in Midtown Manhattan, and we provide capital for options and equity traders from all over the world, trading both remotely and in our offices here in New York City. You'll want to click our subscribe button right now so that you don't miss any of our free trading videos produced for the trading and investing community. Now, in this video, we're going to be talking about weekly credit spreads. Weekly credit spreads are simple and easy to understand, and you'll need only about 15 minutes a week to execute the strategy, believe it or not. Once you put the trade on, that's it. If you win the trade, the balances in your broker's statement will automatically reflect the win. You don't have to close the trade. The options market will close it for you automatically. All you've got to do is put the trade on, and the probabilities will take care of the rest. So if you're looking for an easy to execute strategy that will take you minutes in a week to manage and can potentially outperform the stock market, in some cases massively, we hope this video helps. If you'd like to learn 3 more real-world option strategies that our traders use, including the surprisingly simple and powerful strategy that some of the greatest investors in the world like Warren Buffett employ all the time, plus an options trading strategy that has a statistical 80% probability of profit month in and month out, plus an option strategy that you can employ with a stock that you like where you'll make your target profit whether the stock goes up, goes nowhere, or even goes down a small percentage, then you should check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window. So don't worry, you won't lose this video. You'll learn more in a couple hours from this trading workshop than from years of online trading education. Now, I'm sure you've heard of stock options, but just to quickly review, buying calls gives you the right to buy 100 shares of a stock at a certain price, and buying puts allows you to sell 100 shares of a stock for a certain price. But there's another kind of option called an index option. And with index options, you get paid off in cash. Index options don't involve shares of stock at all. With index options, if you buy a put and the index goes below the strike price of that put, you're paid $100 for each point below that strike price that the index hits on the day that put expires. The opposite is true for index options on calls. If you buy an index call and the market rallies past the strike price of your call, you get paid $100 for each point above your call's strike price. Now, as a trader, you can buy shares of stock but you can also short those shares. And similarly with options, you can short options. In other words, sell them, and then you get the premium that the option buyer is paying. So if you sell an index put option, but the index rallies above the strike price of your option, then you get to just keep the premium from that put that you sold on the day that the put option expires. So let's go with a real world example of this weekly credit spread technique, and I think everything will come into focus for you. So on December 29th, 2017, the S&P 500 was trading at 2686. That's one of the indexes, S&P 500, also known as SPX, that can be traded via index options. So if on December 29, 2017, you sold the SPX 2690 put, you would have received about $10.62 for that. That option's a little bit above the market. Remember I said the SPX was trading at 2686, so this would be selling the 2690 put. You would have gotten about $10.62 for that. If you then simultaneously bought the 2685, 5 points lower, you would have paid out $8.54 for that protection on that short put that you sold at 2690. That combination of a short put and a long put is called a credit spread. So in this case, you receive $10.62 and you pay out $8.54, so you'd get in a net, you'd net cash flow of $2.08. Well, everything in options is multiplied by 100, so you'd get in $2.08 times 100, or $208. Now, if the market rallies above 2690, which is your short put, and goes to wherever, but above 2690, you keep the entire $208 that you received the first day that you entered into that trade. On the other hand, if the market drops below 2685, then you would lose $500. However, the original $208 you got in, you get to keep that no matter what. So your real loss would have been $292 if the market sold off. So you make $208 if the market rallies, basically, and you lose $292 if the market sells off. Well, in this particular example, on January 5th, the SPX, the S&P 500 index, had actually rallied to 2743. So the 2690 put that you sold, that expires with a value of 0, but you sold it for over 10 bucks, so you made a big win on that one. On the 2685 that you bought, that also expires with no value at all because the market has rallied, and the puts only have value when the market sells off. In that case, then, you would also have a worthless option that you bought. But the net of those two is a positive $208 into your account. So you would automatically see that day a $208 profit in your account because the market rallied in that particular instance. So the strategy is really simple. You just do this every week as long as the S&P 500 is trading above the 200-day moving average. So we don't trade this when you initiate the trade, but you look at the 200-day moving average and you realize the S&P is trading below that. You simply don't do the trade that week. If in each week of the year 2018 you sold the first SPX put option above the market, and then you bought the 5 points below that put, which is below the market, if you did those two things every week that the 200-day moving average was below where the market was, that would have been executing this strategy. If you win, again, you're going to make about $200 per week. And on the cases where you lose, generally you'll lose about $300. But remember, studies have shown that the market actually goes up more often than it goes down. So we got a little bit of an edge in this strategy. Well, in 2018, it turns out that the S&P 500 was above the 200-day moving average 41 out of the 52 weeks. And during that period of time, had you executed this trade, you would have won 26 out of those 41 weeks. So you would have made the roughly $200 26 times, and you would have lost the $300 roughly 15 times. And remember, this is a weekly trade, so you're just taking your capital and rolling it over every week into that next week's trade. Well, if you're doing the math quickly, you've probably realized what a spectacular return that would have made for you in 2018. If you took that original $300 of capital, that original $300 of risk that you have in that trade, and put that into your account and used this strategy, you would have ended up with $2,000 by the end of the year. That's an incredible return. That's over 500%. And of course, you could have traded this larger. You could have traded this, say, with a $3,000 risk, and then you would have ended up with $20,000 of account size by the end of 2018. In other words, a $17,000 increase. So 2018 was a very, very good example of how powerful the weekly credit spread strategy is. So in this video, we learned about the power of a simple strategy known as the credit spread. We talked about how you can repeatedly execute this trade each week, and we saw how it blew away the stock market in terms of returns in 2018. There is an alternative to buy and hold stock investing. Option strategies can be employed that can have remarkable results. Yet, you'd only need about 15 minutes a week to execute this strategy, and your broker will take care of the rest for you. I hope that you're starting to see that option strategies may actually give you the opportunity to reach your income goals. So go ahead and click our subscribe button so you don't miss any of our trading videos produced for the trading and investing community. And while you're at it, please add your feedback in the comments section for what videos you'd like us to produce next, as well as what you found helpful from this video. So from all of us at SMB, trade well.